Welcome to Trading Lounge and the ASX 200 here on the weekly chart. And I just want to go back over the bigger picture. Now, we're looking at this here in Elliott terms in terms of wave 3 here and then wave 4 all the way over here. That wave 4 there, we're looking for a simple wave A here and 3 waves for ABC for wave B. And then from wave B down to wave C, we're looking at 5 waves of intermediate degree. So wave 1, wave 2, 3, 4, and 5 down here. Now, I need to explain something. This little move, moving up through here, has now got overlapping wave structures. So this moves down here. So this can't be 1, 2, 3, 4, and 5 here, right? It can't be that because we've got overlapping wave structures. So wave 1 here overlaps the top of this one here. That makes it corrective. Now, the US markets, they're different from this, the same as our Australian banks as well. So with our Australian banks and so forth, and the US indices, the move up through here, we could actually call as wave 1 and wave 2 coming back here. And they have a much longer wave 3 here. In fact, their wave 3 coming up here takes the top out up here. So they've got a very clear wave structure. So their current correction that they've had is an ABC correction like that for wave 4. And so they will make new highs above their previous highs there, which in this case will be here. But I don't think that all markets will do that. I think that the Australian market, for instance, because it's got overlapping wave structures here, then it will continue to rally here and then move down from here. Now, I have to also say too that it's a bit of a mixed bunch really, because the Australian banks, CBA and so forth, they're also in this particular pattern here as well. So their move back to here can make new highs up to, say, CBA up to $100, so to speak, in line with the US markets. But the American banks, they've got the same picture as this here, where their move down here is overlapping this structure here. So we've got the Australian banks looking like this here, like the US indices, but we have the US banks showing a very clear ABC structure here. Okay, so some markets will, in this rally here that we're going to have now, because we need to call this in as a low here now, and we're counting it as 1, 2, 3, 4, and 5 here. We can look at that in more detail. But in a nutshell, we're calling that low in. So now we're looking at an A and a B and a C wave coming back into this area here and then moving up. Now, the mining sector will probably hold us, peg us down somewhat into all of this. But as I mentioned, in the US, we'll be looking for new highs being made above here. So what we can do in terms of actually trading, I mean, the analysis is a bit of a guessing game, but in terms of trading, we can trade what we know and what we see, and we can look at internal wave structures moving up here. But this is a reasonably clear 5 wave structure to the downside now, and we're looking for support on 5,000, because obviously the 5,000 is the line in the sand. It was support here, then it's become resistance. We need to see if it's going to become support again at that point there. So let's drill in and have a closer look at that on the daily chart. So on the daily chart, from this wave B up here, we're looking at wave 1 and 2 and wave 3 here. Wave 3 can also fit over here as well. Not that it makes any difference, because it still leaves wave 4 here. And that wave 4 there would go down for wave 1, an A and a B and a C for wave 2, down for wave 3, back for wave 4, and down for wave 5. So it's not it does fit reasonably well. It's not the best looking sort of structure that I've seen, because we've seen well, we've always got the finance and the resource sector playing out against each other. If they're both running in the same direction, be it up or down, then it makes the ASX very easy and neat and tidy in its wave structure and form and so forth, and easy to trade. But when you got them going in different directions, the finance and the materials, then it can make a very choppy environment for this market. Now, what we're looking for here is calling a low in here, and basically we're looking at this as a move up now. So we're putting wave 1 here, or smaller wave A, not that it matters, and wave 2 here. So we're looking for the A wave can be in 3 waves or 5 waves, and I have to say that normally in a wave 2 we would have 5 waves. So it's probable that we're looking at 1 and 2 and 3 and 4 and 5, something like this, coming into these highs here. Then the B wave coming back in 3 waves, and then 5 waves for the C wave moving up. Now we'll just see how all of this moves through here. If this really powers up in line with the US markets and shows more strength than I've anticipated and moves higher up through here, well then we'll still be on the same track and we'll just end up moving up higher with all of that. So okay, so let's just drill in a little bit further and start to work this wave count, because we were talking yesterday about being long on 4,900 here. So on the 2-hour chart, and coming in from the low here now, so we're talking about, wave 4, wave 5, low coming into play here. And we're looking at this as wave 1 here, moving up here in 5 waves, then an A wave and a B wave and a C wave over to here. In fact, made a little error there. That the B wave can go in here. Not that it makes a lot of difference, but it pulled back into the 61.8% mark. A lot of this in here did confuse us, to a certain point. We couldn't sort of work out the choppy price action. It just wasn't clear, but we knew that we're at the 61.8% retracement level. We figured that the US markets and the European markets would be pushing higher in their wave counts, which was a bit clearer. So we were looking for support on 4.9 here, a tested support, not just popping its head up and folding back down. The breakout's important, but the retest to find support is more important. And once that's established, which it was over here, then we can look to go long. Now, obviously, we can trade to the next largest number here at 5,000 and get out, or we can look to add positions all the way through and continue to the upside, which I think is a smart thing to do, but as long as you haven't overtraded. If you've overtraded, then you need to take the money off the table and manage the risk in a much tighter way. But if you're in your risk ratios, then there's no problem in accommodating what reaction there's going to be at 5,000 and then move up from there. I think it should, if we're right, then it should move up reasonably swiftly through all of this and not cause too much problems at the 5,000. At the sub-level, we can look at group 2 below 5,000 and group 1 above the 5,000 there as well. I'm going to go to the 15-minute chart now and just sort of drill into this. And so look, as I mentioned, and as this was unfolding across here, it was really messy and it was a bit of a guessing game, and we understood that, and that's why we thought that well, if we get a nice support on the 4.9 here, then we can move in from that point. So yeah, that's what we've done. And just coming back a little bit here, we've got wave 2 here, 1, 2, 3, 4, 5 for wave 1, an A and a B and a C for wave 2 here, and then up for 1, back for 2. Then from wave 2 here, we're going up to wave 3 here. So we've got 1 and 2, and then 1, 2, 3, 4, 5 for 3 and 4 and 1 and 2 and 3 and 4 and 5. So we're looking for a reaction like this here at the 5,000. Now, once this wave 5 of 3 comes into play, we'll look for an A and a B and a C into group 2. Group 2, 65, 72 and 80 in here, and should find support there on top of wave 3 at minimum at I mean, normally wave 4 would pull back to the wave 4 with one lesser degree into here, but that's beyond the 38.2 retracement level. 38.2 retracement level comes in on top of wave 3 here at the midpoint, the 49.50, and then we'll look up from that point. So basically, we're looking for a high today, a corrective pattern across the 5,000, and then another move up into this area here from wave 4 to wave 5 here. Because the extension's in wave 3 here, that means that wave 1 here and wave 5 should be roughly the same length here. So really all of this across here is a classic trading levels pattern. So it's the arrival, the reaction, the first high above the level, then the corrective process, in terms of wave 4 in this case, and then we'll be looking to add here, we'll be looking to add through up here as well. We want to build the position on these lows here, not so much this one but this one here, but if you haven't got a position then that's fine. But basically once that becomes the support here in a nutshell, then we'll be adding positions, but we'll try and get better lower price positions as this unfolds as well. We need to be a little bit diligent. There's no point in sort of buying into here if you're going for the longer term. We need to wait for over here and support here, because if I've made a mistake anywhere, then this market would fail at this level here. Yes, it can still poke higher and finish things off and do all that, but never find support over here and basically, fade from this point. So bear that in mind. We do want to be on that support from that point there. Basically, Hong Kong and China are doing all the same things. I've spent a bit of time on this one today in the bigger picture, so we'll just stay with this today. But this is how it looks. We're in the trend. We're going to build into it. On the equity side, on the CFD equity trades we're going to eliminate all the short trades we've had in the market for hedging our long positions to keep our book balance while we worked out what was going on. So we're going to drop the shorts today and be looking to add to long positions as well. So that's our strategy. Alrighty, cheers.